Hello and welcome to Banks and Markets. This is Binam. In this video, I am going to talk about portfolio performance evaluation. This is going to be a comprehensive example, and this is the first video. I am setting the scene here first, which is the investor is going to invest from week 1, and I have set a date for that, which is 17th of February 2020. So this is in American style. Okay, so and then each week, and also during Easter, and week 7, 8, 9, 10. So effectively there are several weeks, and there are 13 weeks for which the share prices of some hypothetical stocks named A, B, C, D, E, F, G, H, I. So there are 9 stocks named A to I in different sectors such as finance, utilities, properties, industry, and commerce, and their share prices are as follows: the closing share price for each of these dates. So they are progressing, the dates are progressing weekly, and these are the share prices. Now, first thing is to find out the share price return. Finding out the share price return is easy. It is simply equal to the new share price, which is this, divided by the old share price, which is 1 week before, minus 1. That gives us 0.03%. Now I'm going to do the same for all of my 9 stocks for all the weeks A, B, C, D, E, F, G, H, I. So all 9 stocks, these are going to be the returns. Once these returns are calculated, what I am going to assume is I have a total of, let's say, £1 million. £1 million available to me for investment. So that is the amount I have: 1, 2, 3, 4, 5, 6. Now what I have said here for all these companies is I will be investing equally on each of these stocks. So 1 million has therefore been divided by 9. Therefore the investment amount for each of these companies stocks are going to be 111.11. So therefore if I add them all together such as this, then the total amount is going to be this 1 million. Alright, now what I am going to do is I am going to find out how my portfolio values they change. So for that, what I would do, this was the amount 111.11 invested in stocks A. Now what will it be in next week? I can find it out by simply multiplying it with the rate of return which I had calculated, which is 0.03% in this case. So therefore I get this as that particular stock A's value in the second week, and therefore I have already calculated the returns for all these stocks, which means I can find out all the amount for all the stocks. So that's what I have found. Now I can simply add all the amount coming to me from each of these stocks, all the 9 stocks. So that's the total. So 1 million now has become 1,577,78. So what is it at the end? And for each of those weeks, so 1 million has now become 1,008,937. So this then also allows me to find out the portfolio return. So the portfolio return will therefore be the simple change in the value, which is new value, divided by old value, take away 1. So I've got these as my portfolio return. And similarly for the benchmark, I have these values, so I apply the same rule, which is the new value divided by the old value, take away 1. Therefore I also get the the benchmark return for each of those weeks. So this is how I have been able to organize my portfolio return and my benchmark return. So therefore I now have these 2 columns ready to allow me to do different return and risk calculations. Remember, the benchmark index could be the value of the index from the market, such as FTSE 100, FTSE 350, or if it is global, then S&P Global 1200, and so on. Whereas this is my portfolio value, which I have calculated. Of course, the share price should be downloaded, and this is something that can be done through Yahoo Finance as well. You just need to find out the stocks where you are investing, or you may have already done these works in the past in different weeks, and therefore you know what is the amount available each week from those investments. So you already may know these values here, the portfolio value each week. Therefore you have been able to calculate the portfolio return. So now in the next video we will see different techniques that will help us evaluate the portfolio performance, comparing it with the benchmark performance. Thank you for listening.